Well, there are a few things here that I want to cut right through. One is that their trading revenue is very impressive, right? I mean, they have a significant beat there, both on the equity side and a strong fixed income as well. We want to see those institutional businesses really be kind of the balance here for Bank of America when you start to think about other businesses. We also have provisions coming in line with expectations. Something Bank of America has not done yet is given those expectations for net interest income figures for the year, as we've seen the other banks not only do but raise. So it's not going to be an easy comparison to make when you think about what their full year expectation might be. They haven't given one yet. Interestingly, I think this is very, very important. The non-interest expenses came in above expectations. And so remember, Bank of America has long been an expense management story. Are investors going to be okay with that figure? I would also say they had a regulatory action that was recently announced as well. So
I'm afraid to ask, what's a regulatory action? Someone didn't do the dishes.
The CFPB, the OCC, they didn't like what was happening there. They accused Bank of America of some illegal practices when it came to overcharging on fees and when it came to handling certain customers.
Their PowerPoint deck of 37 pages is different than the J.P. Morgan Power deck of 39 pages. This has Moynihan acuity. What is Brian Moynihan's most important focus in this earnings report?
It's funny because, to your point, the charts are better, but I want that net interest income guidance. I want to know what they're making for the year. I think that there's kind of no other story in town when we were talking about the numbers that we were talking about earlier here. Can they meet the pace of J.P. Morgan's net interest income growth? It is very, very significant there when you look at that 25% increase in the first 6 months of the year. Can Bank of America keep up?